Ladies and gentlemen, good day, and welcome to the Tek Technologies conference call hosted by Emkay Global Financial Services Limited. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then zero on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Abhishek Taparia from Emkay Global Financial Services Limited for opening remarks. Thank you, and over to you.
Good morning, everyone. Good afternoon, everyone. I would like to welcome Mr. Lakshman Rao Janumahanti, Chairman and Managing Director, and thank him for this opportunity. I shall now hand over the call to him for the opening remarks. Over to you, sir.
Good afternoon, everybody. Thanks to MK Global. We are all here to discuss about the various developments at Tek Technologies. I first want to bring to your attention about our MoUs we signed with Interarch and affordable robotics and automation. So Interarch, as you all know, is a leading PEB steel building manufacturing company in India with several units across India. And the MoU with Interarch, which we entered about a couple of months ago, enabled Tek to lead their products marketing in United States especially, and also assist them in designing and drafting services here in India. More than Indian services, the most interesting development is working for US construction industry. Through Interarch, we will be procuring not only the designing and detailing services for which we have been doing for last 2 decades, but we'll also be providing them the buildings manufactured by Interarch and supplied to them for erection. Even for erection, we are planning to tie up with a couple of well-renowned erectors in the USA, so that the builder gets the full gamut of services, right from designing, detailing, supply of the building from India, pieces, so that steel building can be erected in the site. Then the finishing operations will be taken care by the builder to make the building like walls and windows and doors and other stuff. So this is a way buildings are erected in USA, and our experience of last 20-25 years help Interarch to get into the US export market. So that way, Tek will gain not only the work for designing, detailing, and sealing of the buildings, which are mandatory in USA, and also commission on the sale of the building value in future. So already we are discussing about 5-6 buildings prospects, and together we are participating in a trade show in November in United States. We are on the same platform, in the same booth, representing our collaboration and how it benefits the builders in USA. So this will be the major step forward. But for these income streams to come in, it might take a couple of quarters, but the foundation has been well laid. Similar arrangement with affordable robotics and automation is also a listed company. We entered a couple of weeks ago. Under this, our MES division, which is well-versed in robotic designing, layout designing, shop floor designing for automobile companies, will be able to take affordables way into United States and mainly Europe, where we have several clients for whom we have been working for more than 7-8 years now. So affordable will gain the advantage of marketing their services, their products in USA and Europe, and Tek will gain the designing and detailing work of affordable both in abroad and even if they have excess work here in India. Currently, our standards and methods, what we follow, are in line with the US and European market requirements. Hence, our assistance will also help affordable to grow their business in those countries. So this also will give company Tek an opportunity to enhance its own business and also earn commission on the entire scope of the project, which can be sizable in numbers. So we hope these 2 initiatives will take our performance better during the coming quarters. And any other details you wish to know, we can go through question answers mode. Over back to the operator.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
So thank you for the opportunity. Sir, I wanted to understand regarding our base CV, the civil engineering as well as the MES business. Sir, for quite a few quarters, sir, we haven't been able to grow our business as expected, and we are a much smaller part of the whole industry. So why haven't we been able to grow? And sir, based on your commentary in the current quarter, it seems that things are turning around. So can we see improvement in our order booking going forward? This was my first question.
Yeah, I understand it's not several quarters, only last 2 quarters have been bad for the company, Q3 and Q4. Even in Q2, the company made a very handsome profit of 12.76 crores EBITDA and PBT of 10.8 crores. So till Q2, it was all fine. Since the election campaigning and elections started in the US, the majority of the projects were on hold till Jan-Feb, and even in the month of March, we started seeing the flow of work improving. But for the projects to complete and start invoicing, it would generally take 2-3 months. So from the Q1 onwards, we hope things will turn around, if not in as good as last year Q1, but it will certainly be better than the Q3 and Q4 of, or at least the Q4 of the 24-25. So that is mainly because order book started improving from March, and now currently it is around $3.5 million, which went down to 1.7, 1.8 2 quarters ago in the civil, which is our main domain. So the construction activity started picking up, but still there is some confusion about the tariffs and the imports of buildings and direction of buildings. So there some disturbance is still there, but in civil we see the traction picking up in this Q1. And coming to our other line of area, which is BAW, that is body in white robotic line designing, shop floor designing. The majority of the reason for the slow growth in that area is new models of automobile have slowed down the number of varieties because there was a lot of activity a couple of years ago for last 2 years, wherein EV models were introduced rapidly, but now they are stabilizing on that, and any changes coming, only minor cosmetic changes are happening. So nobody is taking up a complete revamp of the designing. That's why the designing assignments in BAW robotics has come down, which has impacted our MES revenues. Going forward, we also taken these 2 steps of signing these MoUs, because we will be a part of the building revenues we can get from the building value rather than just providing the designing and detailing services, which hardly constitute 3-4% of the overall building cost. So Interarch that way will gain our expertise in USA, both in terms of design, detailing and stamping, which is a very important aspect for any building to be erected in USA. So that way they gain, and we also gain some commission on the comfortable commission on the overall building cost rather than just doing the designing work. Same thing with affordable robotics, who are into BAW robotics in India. They supply to Mahindra and couple of major automobile companies in India, but they have not yet proved themselves in Europe and USA. So our association will enable them to bring their robots and automation equipment and erect in Europe and USA. And that way it will be a good synergy between both our companies.
Got it. So if I look at on a conservative basis, sir, what is the revenue growth we can expect, and what is the conservative basis, what is the margin we can expect for FY26, considering better utilization of our employee and personnel?
Yeah, we hope that we'll be definitely in the black in this year. Now quarter might drop into red like what it happened in the Q4. Hopefully, it should start improving in Q1, but pick up pace from Q2 onwards. And we hope at least we will achieve the overall profitability which we did in 24-25. That is 24-25 we achieved 16 crores overall profit, PBT, that is profit before tax, and 12 crores PAT. So we are currently aiming to get back to that level. And if things go well in terms of acquisition, which we are still in the process of negotiating with a couple of companies in structural designing space, things can be still better. But we are hoping that we should be able to get back to the figure of 24-25.
Got it. And sir, this would be on a conservative basis, right?
You see, as I see today, from a negative situation in Q4, aiming at achieving the 24-25 is currently our, I would say, realistic number. But however, when we talk over the end of the Q1 or Q2, there will be more clarity.
Got it. So just a final question from my end. Sir, based on we have increased our employee strength quite a lot, like 105 crore is the employee expenses currently. So what is the revenue potential that we can generate from this current base, and what is the employee addition that we can expect in this year and next year?
Yeah, currently we have downsized our MES to some extent during last couple of quarters. Now we have stopped any more reduction. Current employee strength will continue to be close to 1169, which has tapered a little bit over the last 1 year. Not much, maybe around 40-50 people overall reduction. But this year in civil we are seeing the traction picking up. Mechanical is yet to, but a lot of new areas in SPM area we are now trying to gain entry. And because BAW seems to be still stagnant. So once SPM starts picking up and we prove our metal in special purpose machines line of activity, the MES also should start picking up from Q2 onwards.
Okay, good. And sir, what would be the revenue potential for these employees currently if you can employ them at 70-80% utilization levels?
Yeah, if all the 1100 out of which maybe at least 900 to 1000 people may be productive employees in the engineering space, the revenue potential for this entire capacity is more than $25 to $30 million. But filling that capacity consistently is a challenge. That is where we are trying through these MoUs better revenue options. So our capacity of 1000 people is more than 30 million. At a fully utilized model. But currently, the utilization is hovering. Periodically, especially last 6 months, the utilization rate has fallen to almost 55-60%. So it should be at least 75-80 levels, so that the company performance would be much better. Because ours is a sunk cost concept. All the costs, if you look at majority of the cost is almost 70% is in employee benefit expenses. So whatever utilization we get from them, that will add to the revenue and to the bottom line immediately. So from current level of, let's say, 4 million per quarter, last quarter it was little less than 3.55 million. So from there, whatever growth comes up will go to the bottom line. So we are currently just below the break-even in the last quarter. Probably in Q1 we'll cross break-even and show some positive result. And from Q2 onwards, we should be able to shoot up reasonably well. As the revenue adds up, it will go to the improve the model.
Got it. Sir, coming to your comment, sir, why are we facing this issue of in the civil segment where we are a smaller player than what would be the overall market size? So, sir, is it because we aren't able to acquire the structural acquisition currently, or is it because of general slowdown where construction activity has stopped in US due to elections, and post as it improves, we can expect improvement. Is this understanding correct?
No, in civil, it's a fragmented market. We, I would say, are one of the leading players on the top 2 or 3. Prochus is another company which is of our size, and there are 4 or 5 players who are about 500 to 700-800 people strong. So that way, in civil, we have one of the largest capacities in India. But as you correctly said, your second guess is correct. During the elections and soon after the elections, uncertainty, civil building construction has taken a very slow pace in USA. That has directly impacted our revenues and the workflow. Actually, if you look at our write-offs and bad debts, which used to be 3-4 years ago to the tune of 200-300K, have come down to some $20,000 to $25,000. That is a check for your quality standards. So our quality has been well accepted, and we have been considered as one of the most preferred detailer in USA. Second reason what you said is also correct, that our delay in acquisition of structural designing company is also not given the kind of growth we anticipated. So now we are closely talking to a New Jersey-based company, but I can't comment until some positive thing happens.
Okay, sir, I wanted to understand, sir, there's a company called PDBS where they, so what I understand from the structural design aspect of our operations is, these are very regional companies. So a company in Florida would work only in Florida, a company in New York would work only in that area. So have we thought of the PDS model where we, rather than acquiring these companies, we tie up with independent consultants and give them a share of profit to grow our business? Sir, is that a possibility, or we would require 100% ownership of the end company to grow our business?
No, working for again as a part-time will lead to Indian rates and lesser margins. So it is always better to, as you correctly said, structural designing is a regional activity. Somebody in Florida generally works for majority of the company, 90% of their work only from Florida, maybe 10% from other parts. Similarly, somebody in New Jersey will be working for construction companies in New Jersey, New York area, and maybe 10-20% from outside. So acquiring at least 4, 5, 6 companies in different regions give us a overall national coverage. So that was our plan of acquisition, and it also, first one is the most difficult to acquire, because once we have a structural designing company and Americans working in that and able to showcase that we are running the show here with Indian support and able to meet deadlines and able to give better quality at low price, there will be, as you said, some partners may join and willing to work with us, or we can make more and more acquisitions, and the team, which is a structural designing engineering team, will be able to impress upon the new acquirees to be positively respond to our proposals. So first acquisition is the most difficult one, and we are looking for people with somewhat similar mindset and commitment. And once that happens, using them and the front end, we will be able to make regional acquisitions, at least 1 or 2 a year, to ramp up our structural designing business.
Got it. Sir, I have more questions. I'll get back in with you. So thank you so much.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Asta from PKD Advisors. Please go ahead.
Hello. So my first question is that how many orders do we have in hand right now? Like, can I get a bifurcation also that with Interarch we have these many orders, that's our order book size, and with Affordable, that's our order book size?
Our order book size on the civil engineering, designing and drafting, which is our internal order book, is now close to 3.5 million as on 1st June. So it has fallen down to almost 2 million about 6 months ago. 8-9 months ago. And now currently it started picking up in the last 3 months, I can say, and it's now currently is 3.5 million. With Interarch, we have at least 5-6 builders we are discussing as a total overall scenario, but still we are yet to make a first sale. It's hardly 2 months ago we started proposing ourselves as a provider of the buildings, but I'm glad that there are quite a few RFQs, at least 6-7 buildings we are discussing with the clients, And there is also some confusion about the tariffs. Is it a tariff on steel or is it a steel building? And how much is that is still they are not able to make out. But our offers have been found to be very attractive to American builders because there is a considerable reduction in the labor component in fabrication works, which gives them an advantage even if there is a marginal tariffs. So this tariff confusion is also something which delayed the takeoff in that field. But I'm sure some clarity will come in a month or two and things will start rolling.
Understood, sir. So, since this 5-6 builder, we are already in talk with 5-6 builders, what would be the project size? I mean, for individual builder, what would be the project size? Would it be maybe just in Indian currency, would it be 1 crore, or for a bigger project, would it be 5 crore? So then our margins would be improving, right? If it's a bigger project.
No. No building will be less than at least $500,000. That's about 4 crores. Even if it's a medium-sized shed or pre-engineered metal building, I think building minimum average you should take it somewhere around $500,000, and it can be $2-3 million also, depending upon the size of the building. So we have few buildings which are in the region of 4 to 500K, a couple of them, and couple of them more than that, close to 1 million, which are under the RFQ stage. But due to this confusion in the tariffs, the builders are not able to push forward. But couple of them has indicated that our pricing is very competitive and they wish to go forward once they have some clarity on the tariffs.
Got it, sir. That's it from my end, sir. Thank you so much.
Thank you. We take the next question from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, thank you for the opportunity once again. Sir, I wanted to understand regarding this JV with Interarch. So what would be the commission that we'll get on the overall revenue? And sir, would we have to provide our services at a lower cost to these players because of being present in India, or on that thing?
No, the pricing of our services will remain as what we charge to US clients, for not only for designing and detailing, but also stamping and even supervising of the project during the erection. So we will be certainly getting a decent amount of revenues for the work what we rendered. Apart from that, we are eligible for 5% of commission, up to 5% of commission on the building cost itself, whatever the export value of Interarch. So that way, if we start getting the buildings, it will be a sizable contribution for us.
Got it. So there's another player called Pennar Industries who does PV exports to US. So what we understand is they do everything in-house. So how is Moltech's and Interarch's JV or MoU positioning different from what a Pennar would approach a client to, and how likely are we able to get orders from this going forward?
So as far as my knowledge goes, Pennar does the exports, but Pennars also need a front-ending structural designing firm or a stamping PE, which I don't know whether they have or not. I can't comment on that. But we have a PE on our employment, and also firms which work with us in PE stamping, which we have been doing for last almost 10 years. So that is a very critical input for the builders in USA, without which they can't buy and erect buildings. So I'm not fully aware of Pennar's model, but our relation with Interarch will enable us to give the overall designing, detailing, stamping and the building supply. What they need is to provide the foundation, erect the building and close the building with glass or shutters or prefab products. So that way the building construction will be very fast and economical. Our pricing shows there is a massive cost difference between what is fabricated within US and supplied from India or even from other Asian countries.
Got it. Sir, in our civil engineering side, sir, is there a possibility of us providing these services to European customers or any other market where margins are good, or we are currently focused only on the US market?
Our civil buildings are focused only on US market, whereas our MES services are predominantly in Europe. That because major automobile companies manufactured in Europe are related with us for last 7-8 years. Our business model is mostly for European MES services, that is automobile. One or two accounts we opened in USA, including Tesla. So hopefully Tesla tier 1 suppliers we are dealing with. So in USA also we have automobile clients for automobile services. Whereas in civil, it is predominantly USA.
Got it. So, just final question from me, sir. What percentage of our revenue did come from the structural design or the member design aspect in FY25, and what is expected in this current year?
It's somewhere hovering around 600 to 700K. That's about 5 crores for last year, and even this year also it is somewhere around that. Because as I said, last 6 months the activity is not taken off in USA, but still we are maintaining structural designing somewhere around 500 to 600K. Maybe more than that, 600 to 700K.
Got it. Sir, if I look at the Tek Technologies from a medium term or like maybe 2 to 3 years, sir, what I read is that there is going to be a re-globalization where a lot of companies are either going to set up their warehouses or do some kind of industrial construction in United States to either get benefits from type or some other diversification strategy. So over the next 2 to 3 years, can we expect, sir, to double our revenue just based on how the market is growing, how MoUs we have signed and the capabilities that we are planning on? So is that a fair assumption?
Yeah, we should be in 3-4 years able to double our sales with all these MoUs and the new lines of activity we are entering in, because including structural design acquisition. If these things happen, I'm sure it's a fairly a good assumption.
And sir, on the structural design aspect, sir, can we expect the acquisition to get closed by FY26 end?
See, actually, we have been trying for last 1.5 years on these acquisitions, but we are not finding the correct partners. Most of them are retiring engineers who want to leave the business and go, but that's not what we are looking for. We want at least couple of, or one of the partner to stay with us for 3 to 5 years, and that is where we are not able to clinch the deals. But now we are in a position to talk to one client, one proposal in New Jersey area, who are willing to work with us for 3 years. We are trying to ask for 5 years, and that negotiation is just started. If something happens, we'll certainly be informing the exchanges.
Got it. So that was from my end. So thank you so much and all the best.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. Once again, a reminder, ladies and gentlemen, if you wish to ask a question, please press star and 1. As there are no further questions, I will now hand the conference over to the management for their closing comments. Sir, please go ahead.
Yeah. I take this opportunity to thank all the investors and investors who have attended the call today, and also take the opportunity to thank MK Global for providing the opportunity to connect with our investors. Thank you very much. Have a good day.
Thank you. On behalf of MK Global Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.